Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, July 20th, 2009. Well folks, as we get into the video today, I'm going to talk a lot about the technicals and the sides of the charts that we really need to focus on right now because we are coming into a major point in this market. The question is, which way is it going to go? We've released that, as I've said in multiple videos prior to our premium subscribers in the Research Center and in the intraday stock chat, but I'm going to kind of allude to some various things on the charts that you need to worry about or need to watch for, because it's either going to be a massive move one way or the other way coming, and we think we've isolated it pretty accurately. So keep in mind that what you're seeing today is another pause day in the markets. The markets paused on Friday after a monstrous up week last week. In fact, the Dow and the Nasdaq were up 5 straight days, the S&P up 4 straight until Friday when it was down fractionally on the day. But bottom line is this, folks, the markets are preparing here for a move. You're coming into some massive earnings this week. Not a lot of economic news, but next week some major economic news is coming back, plus more earnings. And the next couple weeks are going to really telltale which way we're headed. We're either going to be breaking out to the upside big or the downside big here over the next couple weeks. Now the question is again, well, which way are we going to break? Because right now the markets are pausing for their second day in a row. The overall markets are slightly positive right now, but barely. All right, you have the Dow up about 46 points, 48 points right now. The Nasdaq is higher by 11, and the S&P 500 is up about 5 points. So really about a 0.5% across the board. What you're looking at right now is the SPY 10-minute chart, and I want to really go over what we're seeing here in regards to where this market could be headed and what are the key levels to watch and everything like that. Number one, what you saw today was a little bit of a gap up. That's coming off of the CIT was basically got a bailout from their bondholders, $3 billion bailout. There was some positive news out in Asia where you saw the Asian markets really ramp higher overnight, and that carried over into the morning in the U.S. No doubt about it here. You saw a nice little gap up. The markets, as soon as that gap up happened, though, started to fade. Interestingly enough, we gapped right into a major trend line. See this green trend line? How it connects through the high here, and if you want to go all the way back, you can see it connects all the way down here as well, and I can even show you where it goes to further, which is all the way back, all the way down to here, all the way down to this level right down here, okay? So you can see the line connecting right through, and that's what we hit on the gap up, and I'll go back to that point so you guys can see it. Let me bring my charts back into focus. Right up into here, that's exactly what you hammered into, and then that's what you started to sell. We alerted our subscribers to that in the chat room today as we hit on it. In fact, I even posted it on the blog as a major resistance call on the free blog, which is available to everyone to watch, and sure enough, I was dead on there as that market came right back in off of that. Look at that fade. Beautiful fade. But what happened here was key. As the markets were fading, it was a result of oil fading, and we saw Exxon fading. The financials faded a little. You have a very mixed bag on financials today. Goldman strong. JP Morgan was strong earlier, but Bank of America has really come in hard now. And take a look at this Bank of America chart. Continuing the sell-off after earnings on Friday, really pushed it up initially, and then it just faded all the way. And now look at where it's trading, down 72 cents today. That's a nice fall. However, Goldman Sachs is up $3 today, so it's kind of equaling out. And Goldman is always the key one you watch for direction in a market. And sure enough, Goldman Sachs is really having a great day here and pushing near, not just a little off the highs right now as the markets come in slightly. But bottom line is this, folks. If you want to take a look at ExxonMobil. Exxon gapped up, and it fell $1 off those highs immediately. That's as the market came in. As a direct result. In fact, the USO, same thing, and that was what caused a little fade in the markets. Now, again, what you're seeing here is oil has regained a lot of that, is kind of just trading sideways here. Little bearish pattern, 1-2 bearish pattern off this down candle, which could tell us there may be a little more downside in oil. But the volume today is so light on the SPY that you just got to be very, very careful. As you can see, here's the SPY 10-minute again. We hit the green trend line, we sold off, we went right to the 20 moving average and this beige trend line, and then we started to float higher. Now, the float higher came directly in corresponding to light volume. Look at the volume here. Initially at the open was okay, and then it just died out, and there's no volume in this market right now, and that always gives the market a small upside bias in the market. All right, there's always needs to be a small upside bias when you have a situation where there's just no volume in the market, because generally people are optimistic. This is a psychological thing, by the way. This is all psychological reasons why you have an upside bias when the volume is so light, and that's because people are inherently positive. People just are positive. Everyone, listen, if you're not positive, they give you drugs, right? So, I mean, inherently people are positive. So you have to keep that in mind, folks, is that's really a psychological issue with why the markets always get a little upside bias. A very important thing to remember when there's no volume in the market. Now, it's never 100%, but in general, if you're just taking a neutral market with no volume in it, it will float higher because of that optimism that people naturally have. All right, what you can see again, we floated higher on no volume, the no volume right here. We came right up here, just getting into this double top area, just a little bit below double top. I can draw the line right here. You can see we came up right in this area, and then we started to float back down, and you're coming right into the beige trend line again right up here, and the 20 moving average. So 20 moving average got hit right here. All right, and then right here again, you're hitting it. If you fall through that, you have a blue trend line of support at 94.50, and below that, you have the 50 moving average, which would be a very good spot as well at 94.25 to 94.30. So that's a couple things to watch on the downside. A lot of support here on the downside because you're on the 20 in this beige trend line. Below that, you have the blue trend line. Below that, you have a dotted minor support plus the 50 moving average equaling a pretty solid support. And then even below that, if you were to go lower, you have actually the double bottom right down here at 94.14, 94.15, which is the low of the day, right in that range. So that's all the way down, plus you have gap fill. Let's not forget about gap fill, which is right in that 94.10 to 94.15 level as well. So my point here is this: on the downside, you have a lot of supports that you have to watch for. Now, granted, if the oil starts to sell into the close, you'll probably take those out, but it's going to need a catalyst of oil to really dump out. You're going to need Exxon to really sell. You even need Goldman to come in a little more than it's come in already off the highs there to really cause a sell. Otherwise, you have to favor the upside for the rest of the day. Again, Texas Instruments reports earnings after the bell. Tomorrow, you have a bunch of earnings, Apple being the key component there of the earnings picture, and it's just going to be a very, very wild day. Technology is extremely strong today. Very, very strong. That's probably leading up into the earnings because every company on the tech side has really done very well. Google did sell off a little bit, but Google still had a solid, quarter. It was only down. It was down about $15 when it had run up about $50, $60 over the past week or two. So, in all fairness, just a minor pullback in Google. Google actually down $1.35, continuing to be weak, but Baidu extremely strong. They report earnings later this week. Apple extremely strong, up $2. They report tomorrow. Amazon reports, I believe, Wednesday, if I'm correct, although that has to be confirmed, but it is this week. I know that. That's up $2.35. Goldman, as I mentioned, up 3. And really the one you need to watch now is Exxon. Exxon is actually down 5 cents on the day, and there's something key in Exxon's charts that we've been following here for quite some time that our premium subscribers know about as well, a pattern formation there on the daily chart that, again, hasn't been negated, and it has to be watched very, very closely on ExxonMobil. Alrighty, folks, again, on the upside, let's go back to the SPY 10-minute. On the upside, if we bounce, you're looking at this double top, this pivot high right here at 94.90, then at 95 would be your secondary support, and if we get that out through that to the end of the day, then we need to watch some other levels above it, but I'll keep that for the chat room for now. Take care. Have a wonderful day. Come join the research center and come join the chat room. Best stuff out there, guys. Great guidance, great education, all encompassing in one. All right, talk to you soon. Take care.